Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Thursday, the 28th of April, 2022, just after 6:40 p.m. Central Time. You know, the life of an analyst can be hell at times. This morning, I had my clients sell virtually within 2 points of the high of the day in the NASDAQ, and we were way ahead as the market was falling down from there. The trend, you had the embedded reading, everything was looking good until Apple's earnings came out. And then with Apple, the market took off because they fired on every single cylinder. If it's a 12-cylinder Lamborghini engine, it was firing away on it. Then Amazon came out. Amazon completely flubba-dubbed, and the market went into a tailspin. But the damage was done. You lost the embedded reading, so you saw that happen at 3 o'clock. You had a chance to come out after that. My guess is most of the traders that took this trade realized that, and they're probably able to mitigate this and not get themselves into any type of trouble. Plus, these are the micro mini contracts, so the risk was never that big to begin with, but I hated to see it happen. I'll show you what it did in a moment. Dollar is just reigning supreme. It's got the strong U.S. economy. It's got full employment. And we are sort of used to right now all that is going on with the talk. Yet in Europe, they don't want to see higher interest rates. Japan, if you watch today, they're going to fight it all the way through. They're determined to get the inflation levels back where they want them, and they'd rather have that at this point in time, so they're keeping the yen very weak. If you look at the grain markets, you'll see that they're acting strong. Bonds and notes getting a little bit of a rally. Why? Well, you know, next week, if I'm correct, is the FOMC numbers. It's time to, people will even up, try to figure out what's going on. The 2 10-year notes are running right now in the neighborhood of about a 20 basis point area. Now, when you take a look at a weekly chart here, we're down about a half a point right now in the S&P. For the week, you can see how the market has failed here. We're going to end up April with a loss in the month of April. So now the history books will say out of the past 26 years, 6 of those years had losing Aprils, and 20 of them had gains. More research is going to have to now say that out of the past 15 years, 14 were winners, not 15. Pay attention to that. Always important. Were any buy signals issued on the charts during all this? No. You know, you need a buy signal to go with the seasonals. You didn't have any. You have been peaking out in April since here and just spending your time basically going down. So in all fairness, you know, it's good to look at that and have an idea of the seasonals, but you need the chart to start confirming a buy. It never did that. This is a lower high today than this high, so it is still a pattern of lower highs, lower lows, which is bearish. The market is still under the 18-day average of closes. You might get and this could be dangerous for the bear part, where the 100-day average is starting to flirt to get under the 200. So that would give you the 18 under the 100, under the 200 lined up. That's a bear market, so keep your eye on that. That's more bearish than people think. That could be a very negative signal. Where the market's trying to hold is clearly the lower Bollinger Band, and it has been an oversold market that never did embed. This is where the culprit came in. Everything was good, as I said, up until the Apple earnings, and with that, the market ended up losing on the close the embedded reading. So for the day, it would have closed up on the day about 400 points. It's about 100 higher than where I told my traders to sell short, but the market fell back after this because up until 4, and you had the Amazon earnings, and it went right back down. So I don't think anybody got hurt, but you never know. I don't know what people do. I'm not managing their money. And you don't belong short now. The market has to re-embed. In other words, if it's going to throw back the bear signal right away, tomorrow has to do it. And even with the market down 210 points, you're a higher number in the red line at 25.69. It's got to close under tomorrow 20 to re-embed. I don't see that happening yet. When you look at the Dow, it was an oversold market giving you a bounce, but the chart action is still bearish, and this is lined up in a very bad situation on moving averages. You have the 18-day under the green, which is the 100, which is under the 200. Lots of resistance overhead. This market's still looking, to me at least, as a chartist, bearish. Throw the name off the chart. Forget what you're looking at and read the chart action. In the Russell, you are oversold at this point in time. And here, too, you have that classic bear action. The 18, the 100, the 200. But you've been riding the lower band. You can get bounces away from that since you're not embedded. But I don't think you're going to change the big picture. In the VIX, you pulled back underneath the top Bollinger Band. That's classic. Markets don't stay over that. However, nothing here is bearish. You'd have to get back under 1975 to even break the uptrend on the current pattern. I don't see that happening right now. What's happened in the bonds is they have rallied up to the 18-day average. The market fell back. That average is falling, so you're back into a resistance zone here. But I don't think you're going to get a lot of people that want to do anything right in front of the Fed meeting where it's widely anticipated of a 50 basis point hike. Could they surprise and go for a 75 is already the whisper words you're hearing. Maybe they get a little more aggressive. The one thing we're all looking for is how they're going to do the balance sheets. They're going to run it off, and we'll hear noise about that. We're also going to want to see the minutes of this Fed meeting because the economic data, be it the GDP numbers that we saw today, be it the different regions of the country that are slowing down, how do they feel about that? What do they think the interest rates might do to that? That's not their mandate. Their mandate's inflation and unemployment. Unemployment for all purposes in this modern era is running just beautifully. 3.6%? It's full employment is what it should be considered. But inflation has been a really nasty, strong number. I think Amazon saw that today as people now saying, hey, it's spring, summer, I don't have to buy all those things that I was doing. Plus, there's been price increases. I've seen it on Amazon, so I think others are seeing it too. On the dollar index, fully embedded. You never, at least the way I teach charting, you never buy over an upper Bollinger Band. If you can't get it on your terms, you don't want it. It also means that if the market breaks, you're going to be buying it higher because it's not giving you a chance to do anything. Well, I don't know how high is, but it's certainly looking strong. And as I said in the euro, this looks terribly weak. How would you like to be at a French cafe now? I guarantee you, your bill comes in, and if you're paying versus the dollars, you're smiling. You're probably ordering a second, whatever you're drinking, okay? It's going to be great. I mean, that's what's going on through Europe. I have a friend that just got back from Portugal. It's just dirt cheap. Lower highs, lower lows. You ran the Bollinger Band. You had 1, 2, 3, 4, 5 days in a row down. You rarely go beyond 6, so I can see the market fighting already to get back over the Bollinger Band. Doesn't mean you can't get beyond 6. This is a big sign of weakness. You're looking for bounces because you got an embedded reading. I'd like to get a good one, and I would be telling my subscribers to possibly go short again. Time to switch over to your May Bitcoin. So in Bitcoin, we have lower lows. There's just not a good setup here. The chart is overall bearish and very oversold. In July, Brent versus July WTI crude. I just put this up for you. You can see how the differential has come in from a difference of almost $8.50 to now $4 in this market. You can see what's going on through here with higher lows, higher highs. There's some real problems. You know, Congress wants to get nasty with OPEC now. The House, I think it was last year, passed a bill against OPEC with price collusion. And now the Senate's taking it up. I don't expect President Biden would sign it into law. They'd have to override him, a veto that he would make. I don't see him doing that. You don't need to make an enemy with OPEC. Just realize they're not your friends. Congress realizes it. But then there's the political realities of what do you do about it. When the Saudis need help because they'll be attacked by whatever's going to happen, they might have to turn to Russia, their good friend, to help them out. I doubt U.S. support will be there in the way that you think. May take a new presidency, a new administration for that to change. If it's Trump, I don't know what it'll be. Lower low, higher high, hard to tell what we've got going on here other than a lot of sideways action. Heating oil, gasoline, these are the powerhouses. They're not backing off. They're just going up for the highs. You know, it doesn't take a genius to take a look and say we're going into May. People are going to travel like mad. I just flew home from Sacramento. I don't think there was a seat on the airplane. And I'm talking to other people that have people fly. They are all telling me the story. Today I had a haircut, in case you're interested. And I was talking to my barber, and we were talking, his mother's works for United, been there 40 years. She just retired. So I said, well, she flies forever. He goes, yeah, but trying to get a seat's not the easiest thing. You have to be very, very selective because there's fewer planes right now flying. So traveling, whether it's free or not because you're vested, very difficult. And you're seeing that the heating oil is saying that. Nat gas, I'm in the June now, so no more of the May, rolled over. Let's see what it does against the 18-day average of closes. I want to remind you on the Linn research, they cover in great detail spreads, option strategies, all the markets you just saw me cover, weather if you're a grain trader, because that's going to be important. You put it together and they give you a great picture with this. We probably write as a company, I don't know, 50, 60 stories a day. I'm not asking you to read all those. We can condense it where you get just the markets that you want, but you're not going to get information like this on the internet out of your Reuters, your Bloomberg, whatever you're going it with. It's just not there. These are guys with lots of experience, ex-pit traders. They see the game. They work with the cash people. You get a different look at it. How do you get this information? Let us show you what our customers get. Take your cursor, push it up here, just click that, sign up for the free offers. I'm Ira Epstein. I'll see you all tomorrow. Take care.